Markets are zooming. It's been another historic day for Dalal Street. Benchmark indices have entered uncharted territories. The Sensex has hit 41,000 for the first time. Even the Nifty has topped its new high of 12,132. Sustained buying by FIIs and positive global cues are adding more steam to the rally. But what really is going on in the markets? Of course, profit booking seeped in at the end of trade for both the Sensex and Nifty. What is the bigger story? Why are markets on such a high when, we're hearing about gloom and doom numbers from the economy? Helping us decode and crack the mystery of the high in the markets today is on India Development Debate, Managing Editor of ET Now, Nikunj Dalmia, and a keen markets tracker. Nikunj, what is the reason? Are markets not worried? GDP number, this, that, and the other. What is keeping the markets so buoyant?
It's so good to be part of your show. Thank you for inviting me.
Great to have you.
No, they always say that markets always climb the wall of worry. And in markets, you don't make money on yesterday's data. Market is nothing else but a future discounting machine. In this case, the view in the market is that tomorrow will be better than today and the worst is already behind yesterday. That's the view in the market. Is this a right view or wrong view? That is where you have to debate, and that is where I think you need to discuss and assess the risk. That's one aspect, that markets are hoping for a better, brighter tomorrow. Second, there is liquidity. Now, what drives the market in the short term? Sentiment. Medium term is liquidity. Long term, it's always earnings. Since there is a lot of global liquidity which is sloshing around, 30,000 crore has come into Indian markets from foreign institutional investors in 3 months. That's a lot of money.
Wow.
That's a lot of money. We may look at our markets and feel excited about it, but last night Dow, Nasdaq and S&P also have touched a record high. So it's a rising tide, a lot of global flow. Global flow is coming because India gives you good growth. It may be at an expensive price, but there are 10, 15 companies which give you that confidence that they can grow in this slowdown.
Yeah.
So lack of compulsion sometimes, Tamanna, drives market. You may look back and say, okay, the economic indicators are bad, but markets are saying, look, tomorrow will be better. So let me put it this way. The market economy has not improved at all. It is improving incrementally. Liquidity has improved substantially and the mood has changed dramatically.
What about the depth? Because I believe that the top 20 of the Nifty 50 stocks are the ones which are really zooming. Are we seeing a broad-based sort of shift in mood, or is it still restricted to sort of the headline indices as we're seeing in the Sensex and the Nifty?
It is only headline indices. You frankly talk about, you go outside the comfort of 10, 15, at max 20 stocks, you would say this is a hollow market. It's a market where the print of an all-time high is not making you feel happy. Normally when markets are at an all-time high, the mood on Dalal Street is very different. This time the mood is that of despondency and lot of, losses have come in last 3 years, 2 years, that nobody is feeling very happy to participate. So we are staring at a very unique kind of a situation. Economic indicators at an all-time low, markets at an all-time high. There is no carnival feeling on Dalal Street.
Yeah.
There is no feeling of, halabu on the street. Nobody is feeling excited and everyone is feeling left out. I've never seen such strange factors at play.
Well, we can just hope, because markets, as you said, plan for the future. So maybe there's something that markets know which the rest of us don't. Thanks so much for that, Nikunj. I'll let you go because, of course, you'll have to see him back tomorrow in the morning. But I also have with me Nilesh Shah, top market voice, and, of course, the man to decode this mystery for us. Nilesh Shah, thank you so much for joining us on the India Development Debate. Always a pleasure to have you on the show. There is a lot of conversation asking exactly this question. Are markets divorced from reality? And that's why in a week where we're going to get the GDP Q2 number, and many are predicting it will be below 5%, markets are hitting new highs.
So, as Nikunj mentioned, it's the Sensex or large cap stocks which are hitting high. Mid caps is still 15% down from its all-time high, and small cap is about 30% down from its all-time high. So somewhere the contradiction of economy is reflected into the market in terms of divergence between large cap and small cap. Second, market is forward looking. There are certain steps taken by the government and the regulator to support growth. Interest rates are being cut. Banking liquidity is now positive. transmission of credit is slowly but steadily improving. Oil has been relatively subdued and monsoon has been robust. Put all these things together, market is factoring in that December 19 growth will be better than September 19 quarter. March 20 will be better than December 19. And this whole movement to a partial extent is supported by the fund flow. Suddenly FPIs have turned buyers and they have brought in reasonable amount of money in a relatively quick period of time. Supply has not emerged. There is a small IPO closing today, but we haven't seen large scale supply emerging. So confluence of factors have come together, hope for the future, fund flow, which put together has resulted into Sensex reaching all-time high, but mid-cap and small caps are at a reasonable distance.
No, so one part of it is that markets are hoping things get better. But is that based on any factual information or data that markets are seeing or reading into? Because corporate numbers are improving, but not to that extent. You have a recent report claiming that consumer confidence and consumer spending has plunged to all-time lows. Unemployment is an issue. So what is the silver lining that, the markets are seeing and the rest of us can't?
So let me recount some of the silver linings, and this is absolutely not to deny all the negative headlines, but this is just to put in perspective what is good in the economy. One, while we have seen FMCG companies talking about subdued demand, at the same time we have seen last year Khadi and Village Industries Commission growing its turnover by 25% or 16,000 crore. It's not a listed company, so it does not publish quarterly number, but somewhere they created 16,000 crore growth in FMCG item. The name does include Khadi, but only 5% of sales is Khadi products. Rest is all consumer FMCG product. For the year ending March 19, their turnover was 75,000 crore, which is twice the turnover of largest listed FMCG company. Now you and I don't go and shop in KVIC. Obviously it's Bharat Rural India which goes and shops over there. Maybe we are seeing bottom of the pyramid people going and shopping out at KVIC. On one side we heard 5 rupee biscuits are not being sold in as much speed as expected, but the smartphone sales are still growing in double digit. On one side we have said that automobile sector is going through a tough time, but then products like Seltos from Kia, Hector from MG Rover, they have waiting period. So there are as many contradictions as available in the economy today, and which is probably confusing the market. But more importantly, market is hoping that all the action taken by the government and regulator for helping economy recover will slowly and steadily start coming into play. We had tight monetary policy to control inflation, but now with better liquidity in banking system and lower interest rates, hopefully credit growth will pick up, which will again support growth. Oil and monsoon has been positive for economy.
Yeah.
Corporate tax rate cut should help, investors bring their manufacturing plants to India. So it's confluence of events apart from fund flow, which put together has pushed market to this level.
Mr. Shah, it's also great to speak to you because recently you have been inducted as a member of the Prime Minister's Economic Advisory Council. Does it give you a sense of, where the government is headed in terms of the reforms process? We have seen a lot of announcements being made. I think the biggest one of them is the cut in the corporate tax rate. Some aid on real estate. Are we going to see a lot more at a time when the telecom sector is looking like it's in big trouble as well?
So the chairman of ESCPM will be the right person to answer that question.
Yeah, fair enough.
I can only answer this question as managing director of Kotak Mutual Fund.
Yeah.
And clearly we have seen intent of government in terms of carrying forward reform process. Earlier we had large NPS being created because banks were lending money not purely on the merit of the borrower. Now those scenarios are behind us. Of course we have to clear past NPS, but hopefully going forward future NPS will be lower. Earlier real estate sector, there was no word like consumer protection. With introduction of RERA, consumer protection has come to fore. It is obviously hurting small-time developers, but eventually on that basis, we will create globally competitive real estate industry as big names like Tata, Godrej, Birlas are entering into real estate development sector. Earlier, our inflation was running into double digits. Today, it's running into lower single digit on a core basis. That has been achieved with lots of effort from RBI. The benefit of lower inflation will eventually play out on our interest rates. We earlier had fiscal deficit running into almost higher single digit. Now they are hovering around middle single digit. It's still high compared to world standard, but it's lower compared to our peak. Lower inflation and lower fiscal deficit will eventually reflect into better macro, and that will help our currency as well as interest rates.
Right.
So these are all fundamental changes which are happening, and they will all reflect in stabilizing growth and sustaining growth over a period of time. Reform is a journey, it's not a destination.
Yes.
At every point of time, we'll have to keep on reinventing ourselves.
Mr. Shah, in this journey of reform and with this kind of optimism shown by the markets, which, as we've discussed, maybe a bit, divorced from the economic indicators, what are the areas where you hope to see a rebound the soonest? Is it in, areas like telecom or auto, or do you see agriculture leading that rebound? And what would be your advice then to investors watching this?
So one big sector where we have seen good players delivering sustainable growth is financial services. Across the range of private sector banks, non-banking financial services company, microfinance institutes, allied financial services like insurance and mutual funds, and public sector banks, you have a choice of companies, a choice of portfolio which will show growth as well as sustainability. The second sector where we are bullish is related to chemicals, especially specialty chemicals. This is one space where India could be in a long-term growth trajectory, just like technology was in Y2K days. We believe there is a huge growth opportunity for Indian companies which are focused in specialty chemicals and export markets. And while chemical cycle will continue to have cyclicality, this is long-term sustainable growth from Indian point of view. The real estate sector I talked about is moving towards corporatization of real estate sector or formalization of real estate sector. Weaker players are moving out, bigger players are entering. Clearly, there could be revival of real estate over next couple of years, and this sector can be played through real estate company, through building material company, through consumer durable company, through housing finance company. Since in the real estate sector governance is a bigger issue, it's far better to play this sector via allied sector rather than real estate sector. On the other hand, small and mid cap stocks are today at a significant discount to their historical valuation as well as discount to their all-time high despite passage of almost 1.5 years. A diversified portfolio of well-run small and mid-cap stocks gives you valuation comfort. We believe this is the time to be cautious on valuation. What is looking very safe from a business growth point of view is expensive.
Yeah.
What is not looking very safe from a business growth point of view is cheap. So you have to balance your portfolio in a manner where valuations are, let's say, below the market valuation, and the profit growth, earnings growth of that portfolio is higher than the market earnings growth.
Absolutely. Thank you so much, Nilesh Shah, MD of Kotak AMC there, talking about, a bit about why markets are on this high, even though there is economic gloom and doom. Nilesh Shah, they're sounding confident and optimistic. And before we go, we take a moment to remember the attack visited on the city of Mumbai that ironically has seen a huge political battle today. It has been 11 years since the 26/11 attacks on the maximum city. And even as we as a nation have moved on to greater strengths, it's important to remember the braves who lost their lives. With that thought, I want to thank all of you for joining us this evening in the India Development Debate. Thank you for watching.